Welcome to October 23rd, Principal Profit Trader Coaching Call. We're going to share the screen and get right to it. Okay, so for the traders yesterday, this was the context. There was a signal posted last night. We were in a situation yesterday during the day where, because of this bearish candlestick pattern on the close and the fact that it came from intermediate term resistance, which is this down move here for this last couple of weeks, that it was going to mitigate any big picture bias potential off this zone, at least temporarily, because the momentum not only was temporarily going to be waned by the inverse selling tail candlestick pattern, but also you can see this short setup of a zero line reject here. That's classic. Basically, the upside's done. So the next day, kind of a sideways to down day, right? But towards the end of the day, right, when it came back into good support again near this bias confirming zone here, which would be a key reference area from here to here. So, right, the fact that we were bouncing around there and it has acted as support in the past on three touch points. Yeah, I am looking at this trend line as well. That would be better support, but after this double bottom and a strong move up, we might not get back down there again. So then this zone that we pop back into becomes relevant again, right? So that was the bias confirming key reference area. Now that we popped up into it, right, with a slight zero line reject, inverse zero line reject here, right? So the signal was given yesterday at this double bottom here. So it was an intraday double bottom that was, you could actually see this on the hourly chart as well. Look better on the hourly. So yesterday, you know, obviously this is what it looked like intraday, that selling tail. So when you have this inverse via selling tail, you're going to get some follow through. But remember, this follow through was near this important key reference area. Obviously, the bias confirming zone, the bigger one's down here. But so this wasn't good enough for me to get in or whatever, but this buying tail was, right? Um, the buying tail was a good intraday double bottom. Another reason why it was a higher odds trade than taking whatever on first test yesterday is because this was the momentum was all down at that point. The sustained momentum was against you. And at this point, right, it really was just a sideways day. So it really wasn't against you at this point. You obviously the bias against you intraday, but it was near a potential larger time frame bias area on the daily that could switch the bias back to bullish, right? And that's why, given the timing at 1700 hours at 5 o'clock, the fact that it was a double bottom increased the odds that that was going to work out. That was a really good trade, right? First target up here into the VWAP, removing risk, and then up here, and then as it bounced around up here, I went all out. Now, the another runner target could have been here, but at this point in time, given the nature of the two-sidedness of how these markets have been behaving, even though obviously the intraday bias and other markets were bullish today, I just didn't feel the risk reward was there for me to keep holding because it easily could have came back down. I mean, look at this; everything is just sort of looping around. So I'm not going to not capture profits. For example, this was a 3% move that I could have just went all out on, right? And it came back down and stopped me out. I didn't capture a lot of it because I have to remind myself is that my targets are based on the market context, right? I'm obviously going to let the runner go to a farther target, but it's not like I think my runner, right, has to be up here tomorrow, right? The way that these things have been just going back and trailing stops. Now, looking at today, right, the other markets were up, mostly not as much at that time. You can see, even though the bias on the day is up, we are getting these strong pullback reactions down now towards 4:16 p.m. as the market is beginning to close. There is no more setups, right? But if you were going to take a runner position, right, then you would still be holding a runner. There obviously will be more opportunities to get in, but that's the idea, was that the risk for me to hold to my next target. So I was risking, the reward was this much, and the risk was, my stop was down here. So I was like, man, I have to give up all this to capture that, because those were my targets and reward potential on the day, given the market context, which was that even though we are potentially coming from this larger bias confirming zone here, especially off the double bottom, which then hit the trend line, we got the action reaction. Remember, this has been really the intermediate term bias, right, which has been bearish, which I've drawn on another chart here that you can see how, right, as soon as this, right, this is the bigger picture bullish bias here, that when we hit this trend line, we get strong moves up. But just because we're coming from a zone doesn't mean that the short term, right, is neutral. It's basically it's uncertain. It's been back and forth the last couple of days, represented by this box. Now the intermediate term bias is like 2 or so weeks, and that's been a downtrend. Strong move down. Anything up into it, it's been down. So as you can see, right, as we're coming up, especially yesterday, into that intermediate term resistance, that then becomes powerful again, especially with the momentum indicator saying this was going to reverse. So that's why we've had such sharp sell-offs. And to me, even though we kind of had more of a stronger creep up potential, I just didn't see the risk reward here of holding wasn't as high for me, right? But you know, there's a lot of opportunities in this market, right? So when we have a strong down move that when that capitulation happened on October 10th, what that really implies after that is that we're going to be entering, at least in the short and intermediate term, a new phase of the market. And that new phase of the market is going to be the sideways phase, right? We know markets go up, then they go sideways, and they go down, and they go sideways again, even on these more smaller fractal time frames. So we have been, even though we've had some trending moves, essentially like this is a clear down move, and this is sort of a box that we're around. Here's the high, almost touched the high, and kind of going back and forth. It's kind of an ugly pattern, to be quite frank, because as you know, anytime we're coming anywhere near either the trend line, which I've shown here. Let's just take a look at it, which we can also look at this short-term bias this way. Different ways to look at it, right? This is a bigger picture short-term bias. This also takes into consideration that we're in a megaphone pattern here, which is it's a range that essentially is now taking out prior highs and lows, and it can stop a lot of traders out if you're only trading horizontal resistance. I think you should trade both because if the way that I teach horizontal support and resistance is through key reference zones, so it's never just one line. But you can see how like once after we get the action reaction, you got a double bottom. When we came up in here again, you know that was the essence of my trade. Why wouldn't this zone be activated again now that we've bounced back up into it again? And there wasn't a lot of evidence that this was going to continue downward, even though we had this short-term bearish selling tail candlestick pattern. When it came back down into this zone down here, right, then the bigger picture bias can activate itself. Hang on 1 second, guys. 1 second. Okay. Now that we're at that bullish key reference area again, right? Then longs can become activated, but everything's timing. Just because I know that it's brushing around that zone, like for example, here me getting in was a little premature, then I got out at break even, right? Bounced around a little bit, right? I wasn't active. I'm not excited to get in again, right? There might have been one trade here that intraday that I maybe financed here, something like that. It came back down. I forget what it is, but anyway, there's a couple trades around here. But the real ideal, real good setup was when we had this nice wide double bottom on the hourly. That's the classic, a wide double top or a wide double bottom. That's a setup. Look, wide double top at resistance, short, and it worked out nice. Now, a runner in now that we're creeping up would be nice here, but I'm about capturing profits in this environment, and I know there's always going to be awesome setups. And even on days that are, these ranges have been pretty crazy. I mean, just look at this volatility increase we've had. So, I mean, the average range is around $4,000. It's a lot of movement. Granted, one of my reasons earlier when I went 75% off around this zone at the double top here, I was like, well, I could keep holding that because we haven't really actualized a range today of 4,000. We've been at this point around 2,000. But at the same time, the current day's volume environment was that, let me look at this. We're nearly closing and we are like 40% below average in volume. So it wasn't like this wasn't screaming that this had to be the most volatile day, although, firmly in control. But the idea is that a lot of these days seem really bullish, and then we get ridiculous sell-offs. So I mean, imagine you saw this and you thought this was so bullish coming from your bigger picture zone that you ignored all quad exits and everything, and then you came back and realized, oh wait, I'm stopped out. I mean, that's from going from 3% to maybe getting stopped out. That you really want your stop to be near this next zone, not somewhere. Either make it really tight or put it in the zone, or both. You know, you just don't want it to be too whatever, but used correctly, these work well. Obviously, up here at this point, the range was maxed out, and we're at a stronger zone here. I mean, the bigger the move that comes from the zone, the stronger the zone. Now, we're not just blindly doing this; we're seeing how the day type, as evidenced by this daily call that we're putting together, will then interplay with this. Basically, these key reference areas affect the day type, and then in turn, the day type would then affect how we use these key reference areas. So if I have like a trend day, I'm not really going to be using any key reference area resistance as a short setup. I'm just going to be maybe using it, just holding through it and letting it break through it because it's a trend. Or you could use it as a way to get on board. Here was a really class A setup that I took, right? Strong sell off in the overnight, right? And then bottom building above an important key reference area. Anytime you're in a strong tail like this where we've had moves off it, it could potentially hold. There's also a clear invalidation point here. So you don't know you're going to get a crazy move like that, but that was a great move that I caught, at least some of it. At the peak, it was up 3%. I was like, you know what? That would be a good day. Just take that 3% because you got to ask yourself, when sometimes the market goes up too fast, too soon, it usually reverts back to the mean. If you have a home run of a risk reward ratio of like 6 to 7 to 1, or even 4 to 1, those are home runs. And those home runs will rarely not experience some type of snapback because when things move too fast, too soon, they tend to revert back to the mean. Action reaction principle. Okay, so going back, I don't really want to pick even that. Okay, so going 1 second, guys. All right. So yeah, you can see how this was definitely a day where there was tails, right? And those tails needed to be, in my opinion, these selling tails. This is not. I think there's going to be a potential reentry tomorrow, but I don't want to see this thing sell off all the way down here. Of course, there might be another entry at that point, but we have yet to see crazy conviction. We've yet to really break through this because until we do, I mean, this thing can just keep going. Now, if we go on the weekly, kind of what I was talking about a couple weeks prior has come true. Okay, so we had at this point, right? This was a couple weeks ago, we had this buying tail back up to here. And I said, well, beauty principle, we had a buying tail up to here. And then how did it behave at the 20 moving average? It broke down sharply to the blue and then sideways for a while, right? We broke down sharply to the blue. And now, you might think, well, we might go sideways for a while. There is this node here where there's supposed to be some kind of an inflection point here, but just take everything with a grain of salt. It's worked in the past year. Next week, bam, but this would be a good entry. So, you know, we are sandwiched now between the two moving averages. We are going sideways. So this is, at this point in time, based on the time cycle, the fact that we were at a triple top here, this was a place to take profits, not to think that we were going to break out. More likely to break out when you load into this and then hold a runner, and maybe we'll break out. Like I said, this is an inflection point. I mean, it could, we might get the opposite. Maybe, what if this thing breaks down back to 80? I don't know. Um, we have to really see how this behaves here. It's important that this structure holds because if it does break this important key area of support for this moving average here, it could potentially have an intermediate term downtrend again. But this was, I think, healthy that we didn't just go straight through this then, as other down pullback here is then being bought up, and we're sort of having this indecision pause candle at this special October 20th week, which it predicts maybe this week the pause and the next week we get the launching point. But I would have liked a structure like this to have already been here, right? And maybe even one, it did get to here, right? And then it was bought up. But I mean, how this matures here and how this behaves and whether we get another retest of that, that remains to be seen. Let's take a look at some other coins on the higher time frame weekly. So this is, in and of itself, you have one leg up, two leg up, three leg, and it's pulling back up here. The pullback was anticipatedly expected because we did go up into this major resistance zone, and this key reference area was honored, right? This has been top, but it's been penetrated, so it's not as useful anymore. So I'll remove it. And then I drew this box just to remind everybody that that was the real pattern, that we were in a larger time frame trade. Like, as you see this V sideways dip go pattern up here, then the pattern morphs. It's no longer the V sideways dip go manifested. I didn't want people to think this is V sideways dip go, 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 go. No, now we're at a major resistance zone where we know the larger time frame bias is now neutral again. The V sideways dip go bullish bigger pattern turned everything bullish, V recovery, but now it's neutral. Understanding that now we know that things can get bearish, meaning shorts are on the table. We can take double tops. We're certainly going to take profits on long setups and so on. The portfolio was reduced by half, etc. And I drew this box around just to remind me that that could be the larger pattern, that it would morph from a V sideways dip go to a giant trading range, which could potentially fail here and then bring us all the way back. Unfortunately, could fail completely. Now, the way we got there is bullish, so I'll remove that. The way that we got up here last time was not bullish. It was multiple leg counts up, right, without a lot of rest. It was, and then it just started bouncing around a lot, and that was it. Here, sideways, testing, retest down towards the key levels to give it potential energy and rest so they can launch. We get the sideways action, the false breakdown, and then the V recovery, and then the huge move. So let me go to the daily. Okay, so now that I've zoomed down a time frame here, let's take a look, right? So, I mean, basically, like the reasons why the long yesterday was triggered, I'll just go into some. I didn't really post them in the channel, but this is, the reasoning obviously is that we're at this lower bound here. I'll just redraw it, right? On top of, and it wasn't just that we were at the lower bound. I mean, we were at the lower bound here. I didn't go long. This isn't really a great long, right? Maybe towards the end of this, yeah, action, reaction the next day, perfect, right? Now, just because we bounced in here doesn't mean it's the way that we're behaving around here, which is now we have now a price pattern, which is now, this was a double bottom and now we're bottom building, here, like a triple bottom, if you will. So that triple bottom, triggered along, right? Because then and it was at the location of a bias confirming zone. And we know the action reaction happened off of this trend line. And we know that if we zoom out on this time frame, we can see that there is a bigger picture trend line. It touched here, it touched here, touched here. It's sort of giving this thing energy, right? But at the same time, there's an intermediate trend. There's this intermediate term trend line, right? That goes, and anytime we would go up there, that would then shift the energy, right? Until that is broken with conviction, right? The larger time frame bias is neutral, right? Because it's neutral because on this time frame it's bullish, all good when you're at that time frame, but now that you're back up into the intermediate time frame, it's bearish again. But really, the short term, which is just back and forth, is just what we're experiencing in the last 1 to 4 days or so. So that is sort of the mentality you want to have when you think about multiple time frame analysis. And then the fourth time frame is just who's in control of the day, which is very important. That the other, you see these things move in sync. You don't really want to be fading against momentum in this environment, right? You want the nice sidewaysy bottom building the next day after the dust settles, and then unless there wasn't great momentum yesterday and it was towards the end of the day and there was a stubborn triple bottom price pattern and it was at the bigger picture bias zone, not surprisingly we got the reaction into this intermediate zone. But the two-sided nature, at least on a short-term bias time frame, is just neutral. And then if you add those together, you get the overall larger time frame bias, which is just neutral because there's no alignment between any of these time frames. So that's why I'm less likely to hold a runner until I get confirmation of that, which would be something breaking this trend line with conviction, right? Then I'll have just backing off. Obviously, at this point, anything down here, I'm backing off the shorts, but it would basically be the intermediate term bias, and now the short term bias would be bullish if we broke this trend line with conviction, right? Of course, this is bullish too. So you'd have some time frame alignment until when? Well, until you got up, oops, up towards this key swing high, which is just, and we could even at this point for Bitcoin, we'll draw a trend line. So I would be looking at this area here, which represents this key swing high, and then the overshoot, which represents the trend line for potential problem areas. And that's when the larger time frame bias then become neutral again to potentially bearish, which this would take us up to about, keep in mind this is the future, so the prices don't match up 100%. You can see there's a little bit of a difference. Yeah, that would take us up to about 128, 130, 140s with some folks, just, some of the gurus, if you want to even go by them at this point. They've been wrong so many times at this point. It just strengthens everything that I'm teaching here and that I employ for myself because I'm like, wow, this really is the only thing that I can trust is these, and to think of it in terms of not absolutes, but scenarios and if then statements with the expectancy overlaid over it because there is no guarantee, but it's better than trusting gurus and hype and all the other crap you would see in the space. So with that said, there has been some questions, so I'm just going to go over some of those questions. Okay, real quick. Sidelining on ES, going against my daily call. Well, I mean, okay, so nothing wrong with, I mean, what was your daily call? Was your daily call producing winners or losers? Because if maybe your daily call was invalidated, then it was probably the right move. Also, um, I think I don't know, would you have a rule of how many losses or wins you take on the day? I forgot what you said you posted. You said, I think I need both. You had some bad call trying to trade the reverse on a triple top. Yeah, I mean, I don't trade gold, so it's hard for me to, uh, you know, comment on a setup if I don't do a top down daily call on it because then I don't know what the plan is. It's just like, well, that's a double bottom. Maybe I'm supposed to short that day and I don't take it. But can you touch on trading? Remember, sidelining is not trading, that's trading. Can you touch on trading hours? For example, London, Asia, US for Bitcoin, ES best for volume. Well, the best for volume for futures, especially for the for the indices like the S&P 500 ES that you have listed there, and obviously the NQ and all that stuff, the Russell, is 9:30 Eastern Standard because 9:30 Eastern Standard is when the physical exchanges in Chicago and New York open up. They already have their orders lined up prior from the daily close. So it's like physical people putting in big orders for big institutions. Those will give you an edge in the opening market because if you notice, like as soon as 9:30 opens in the S&P 500, the volume goes nuts. So that can, in and of itself, initiate potential setups or not, or give you information. And obviously, if you want volatility, that's a trader's friend, right? So yeah, the best for ES is actually 9:30 to close. I don't even trade the overnight, which is cool because if I was just trading the ES futures, then I would have the weekend off and I would not have to trade past 5 o'clock, 4:30, 4:15 is when I would cash in or keep it runner in. Because the overnight for me has less opportunities. But for Bitcoin, it's a 24-hour market, and there's obviously a lot of moves that happen sometimes on Saturday, sometimes Sunday. You can see, and you just have to say, okay, that was off that day, and that's that. but it is a 24-hour market for sure, and it's 7 days a week. If I had to take one day off for Bitcoin as a rudimentary, just a regimented rule, it would be Friday. Fridays tend to be give back Fridays. And you might say, well, isn't that a great chance to short? I'm like, yeah, I think, but usually it's something where you might even think you go long and it just doesn't have the momentum and it just gives it back. So it's like better just to stay out of it. So yeah, I think that answers that. I don't know if there's any more questions. Let's see. Um, this one, yeah, you asked about stopped out due to a tight stop. Well, a lot of traders think like I'm taking a low risk entry because I have a tight stop, but you might those little tight stops add up. And there's no point in needless losses because you get beat up. I know this is a smaller account for you. So, when you're losing, it's not much. It's like basically it's the first step up from paper trading when you have uh like a $10,000 account. But when you step up to the next level, you add a zero or so on it. Then it's like, whoa, okay, I don't really want to do this for a thrill as much. So I would say, if you have this set up in the plan in mind and you're scanning, and it gets to a level where you think that it would trigger a setup, where would the stop have to be to invalidate that setup? You know, and then think about your target. Because then what you're really thinking about is your risk with the stop, which is the only thing you can control. And of course, how you respond and react to the market as well. Your perception of it. Better to be not reacting and having a plan to come on to it. But then the reward is in place as well. Because okay, well then I can figure out how to get the proper reward to risk ratio because then I can fine tune an entry. Basically, I'm not going to jump in early. I'm not going to take a double bottom that's not really at the low of the day, but some kind of like one where it's like slanted or something. Like, you want the nice, beautiful setups. Like, look at yesterday. That worked really nicely. That was a wide double bottom. I didn't have to wait through it very long before I financed and took risk out of the table because it was a little tricky going in at that hour. You know what I mean? So the risk was out. I could sleep well. And the first target was like a beauty that moved up quite a bit. Obviously, if I went all in, all out and didn't take off so soon, I would have made more money. But that's just the voice of you don't know at that moment in time when you were doing it. I mean, clearly the day was down, so it wasn't a bad idea to reduce risk. It could have just bottomed around and stopped me out first and then did it. That's what I was thinking. So, unless there's an amazing reason to have a farther target, like sometimes my finance target will be the high of the day because there was like really good reasons why. But at that point, I was trading against a day that had been down, and I was hoping for a turning point later on. So. Yeah, so this trade earned about 1.643%. That was pretty good. So yeah, if I, getting things like the three and the ones and the twos, just sometimes just capture them. A lot of times you'll be giving up things. Now you do want certain situations you could stack these and really let them go, but nothing wrong with just capturing a profit and having realistic targets. Like for me, I let my winner run today because my thesis wasn't this runner was going to go up here without a problem. I'm not really sure what's happening right now. I need to see. I mean, I like the fact that we're closing on strength, but once again, as soon as we're coming up here, right, we there's an inverse zero line reject forming as well, meaning this momentum isn't super aggressive as we're coming up into this intermediate term bias bearish resistance. And that is going to be a problem. There's also two moving averages. There's this swing high, you got this swing high. We need to break this with conviction to get a balanced breakout pattern, which would be a pattern around this size, right? And then if we get that, well, then we're good. And I'm only going to be going long until we get up here. That's the idea. That would be you know, and I don't want to say like, oh, up here is when I would, it's like this is the target, but as soon as it starts to break this trend line out with conviction, even from this swing high, like up here, that's when we have multiple time frame alignment, and now things can really get going because of the way that it broke the structure. But yeah, what's up, Tim? Do you have any questions right now?
Oh, just a basic question like why are the markets in such a slump? I mean, what's
Oh
going on?
man, they're awful. I mean, I guess gold's doing. I don't even look at that because I don't have any of it. Um, but yeah, they're bad. I mean, look, this is one of the scariest. I'm cracking. I don't know if this was real. I mean, I don't know if all exchanges have a candle like this for SWE, but this is a terrifying candle. Don't you agree? I mean,
Well,
the fact that it went all the way down here, but obviously this is a strong buying tail. Now it's triple bottom. This is actually a long setup. So I wouldn't be surprised if, SWE is actually going to be for a daily call would be sideways up, right? We're near this zone. We have the action reaction, but just the fact that you could go from $4 down to like 15 cents in a day, it just reminds yourself like, don't ever fall in love with any of this stuff. I mean, I'm going through two suits from two shit coins from 5 years ago, you know. Um,
well, right, and this is even after SWE has like had so much positive media exposure. There's been so much, investment into it. Like how is it?
Well, I
Like
don't
it's
know why
just
the retail is not here yet. There is no, I mean, in terms of like the institutions and venture capitalists are doing a few things, but retail needs to come back. It's just dead. And they're the ones that like do stupid things like make a steep, like buy at the highs to grab a breakout. All the professionals are taking profits anytime they're at resistance. I mean, I gave a signal here and watched it go up here and I didn't take profits. Like, what the hell am I doing? You know what I mean? I mean, this was a clear, you're up here. Why would you just sit through that? There's too much risk now to say, and part of it is like listening to, I hate to say it, but like idiots like, and that chick, what's her name there, whatever her name is, Tia, in 2 episodes, I don't even read them anymore, but 2 episodes ago someone said, yeah, her sweet prediction was $300 in 7 years. I'm like, yeah, just keep making the number higher, keep pushing out the years so that believers will keep buying your shit. You know what I mean? That's so dangerous to have that ridiculous number like that. um, and this is the type of shit that I'm dealing with. Like, for people say, like, why didn't people take profits on a triple top on Cass that I had here? I mean, why? Because when I told them, they said it was going to $1. Why? Why? Like, okay, fine, but you can't get in again, you retard. I mean, it's like and I'm saying like for myself too, because I've already learned my lesson. I you know, these are the guys that think TA's gobbledygook, those hype guys on YouTube with the giant followings that just find meme coins and like get people that don't care about, some principles and truth and risk management and a systematic way of looking at it. And it just sells more. It's not fun to talk about how you got to do the right thing no matter what, correct process, and it takes a while, but that's just what it takes. And you can see this coin has never gotten anywhere near there, and just absolutely, what is this? It's back towards what it was in November 23. So
crazy.
obviously, I mean, if you had the gall, this is actually a huge buying opportunity. I mean, they're look at where it got, right? And then you have this action reaction showing it. But I mean, most people that are wrecked. I mean, who's got capital left that hasn't? I'm just thinking about average people that are just holding through this and have, you know, views of the market that are irrational. Like their daily call is, well, so and so is going to get to here, and I know this is going to happen, and wait till retail gets back, and the market cap will get 10 times what it is, and then it's definitely a $2 coin. It's just like everything they do is not what we do. Um, it's just sometimes I have to go in those places to find a new project. But even still, I don't even need such a diversified portfolio. I kind of regret getting into so many altcoins. I mean, maybe I won't if these things tick up, but right now it's been, huge losses on altcoins that I would never endure on a trading account because of this whole idea of like a time frame idea. Yeah, I got out of this one is this, as it was coming up here, even though folks were saying this Proton network at this price, which is less than a penny, um, is going to be some part of some banking network and doesn't need customers, and it's going to be a huge, like, that's the type of greed thinking that got me to hold and get into this project. And I mean, I just got rugged on the same thing that got me into Proton, got me into KDA, and got me into LTO. And KDA and LTO have just cost me 55 grand and $14,000 respectively each.
Yeah, that's
Zero
crazy.
rug pulled. And then this XPR here, I didn't put as much on it, 5 grand, but I'm not gonna let that go to shit. It was around, no, I put maybe, what did I put on it? I got it out at 5 grand, but I put 15 on it. I'm like, I'm not gonna like let this go to zero. And I'm glad I got out of it. Just I threw it into something else, or I put it back into my trading account. That's what I did. You know, I'm not. All I'm thinking, instead of me thinking about that idea that it's going to be some giant partnership with some banking thing that they have, and it's going to be this thing, I was thinking, oh, well, that might not happen, that deal, or it could be a lie, like all the other lies I was told with LTO. Like, it has. I actually contacted I'm going back and forth with the Dutch AFM. It's like their SEC, and they're very interested because that coin got to like a $500 million market cap. It wasn't like a small micro, like $1 million. You know what I mean? It blew up. You know what I mean? So where did all that money go? The guy's on his YouTube or on Twitter on yachts with models and doing cocaine. That's where. So he's got a lot of enemies. But anyway, the only thing I know, and this could very well be a scam or not, and maybe I'll kick myself and it does become that thing, and I don't care because the only thing that I know is that I see a double top up here. That's the only truth that I know. Not only do I see a double top, I can count the leg count getting up here. It's getting exhausted, and there's a selling tail candlestick pattern on top of the double top trade location. So, yeah, I'm not surprised that this, got back down to here. And when I went into their channel, it was just creepy. It gave me vibes of this other group, like 10,000 people. They're really hopium. I just don't want to be part of cults anymore. I really don't. And I have another guy that I pay that feeds me things like wall and this. I'm like, I'm done. I might have to stop, you know, taking in that type of stuff. I mean, my theta position was $275,000 at one point at 16 bucks, and I didn't cash out. It's like this is what I'm dealing with. A huge, and like T Fuel, I put 28 grand on. It's worth nothing. So it's like I'm done with. I don't know. I just should not. I don't recommend it. The idea of these staking and investing, because like last bull run, it didn't. Don't keep holding these things based on what the project leaders are saying or some what some guru says. You have to follow basic principles in your own system, and that's the lesson that you have to take away from it.
I would agree with you there. I think what I've taken away from this market slump is, just don't even pay attention to the noise. Like when people say it's going to be alt season, you know what? Until I see it myself in the charts, I don't believe you.
Yeah,
I'm just gonna,
no one knows. No one knows when it's going to be alt season or this season. I've been hearing that we're going to have an alt season for 2 years.
yeah,
I mean, the halving happened, what, 18 months ago? So
right.
typically 18 months after the halving, there is some altcoin stuff. I mean, what was happening before though? Prior, um, like we could just go to dots, Ron, if this chart is old enough, if it goes back. If it was on, yeah, I guess it wasn't on Bybit before. Okay, it is. I mean, that doesn't even look realistic anymore. It's like, look at that. I mean, can you imagine this getting up here?
It's crazy.
Um,
Well, I'm sure there was a lot of people that bought at the top.
yeah, yeah. Um, and this was those parachain auctions, and it was, but you can see like, so here it is 18 months after the halving, like October 12th, it gets a huge run. I mean, we're talking from 34 to 55, like almost up, right? In like a 2 months. So that's what we're not getting. And also, it was a lot higher. I mean, look what it was doing in September and prior to this. So anytime Bitcoin would sell off in the past, these things would get like their little pumps, and then they had the last run now. This is unprecedented that we just had. I mean, it looks completely fucking dead. Like it's not even the same market. And then when it gets these little, you have to, I mean, just respectively, just comparing the size of these, it's insane. So, but be prepared, like, um, markets do, you say, oh, people learn, retail will never come back. Eh, you don't know. That phase could happen again. I think a lot of these projects are going to get squeezed out as I'm personally experiencing. You know, Theta is one though. Is if you believe in the value investing, it was at $16. That was probably overinflated at the time, but it does have a lot of new partnerships and has good partnerships. Apparently, that AMA that I listed is pretty big in the United States, so that's good. But you know, what can I say? I mean, it's just chart looks like absolute dog in terms of like what it's been like what it was. Look at this. I mean, that was at 3 in December. If we go back all the way here, I don't even think I have. Oh God. We look here. Yeah, I mean, this is incredible. I mean, just look at the I mean, this is retail pumping things irrationally. I mean, wow. Just these days are just not, we just don't have this. We don't have it because the institutions don't want to be there yet. But if they ever decide to, like, if the OGs decide to start an alt season because they've got pumped so much and then a few institutions pump it, one of the things that does give me a slight bit hope, but is at least these institutions never just say, we're doing this in Bitcoin. They always write in language Bitcoin and crypto. They're including other projects for other purposes because like you need I guess, a robust ecosystem to facilitate all this. I mean, you can't have Bitcoin without stable coins, for example, and that would fall under that. But as far as altcoins and alt seasons, anyone can make an altcoin. So I would say most of them are scams. Just be careful on that. Sol, obviously, like a sweet coin, defying sort of the other altcoins bearishness. They had a really good time, really good run, even in this alt season bear. But yeah, I mean, until we get out of this really ugly spot here, it's the large time frame bias. I'm still going to be marking it as neutral, which is all uncertain as to really who's in control. That's the fairest assessment, as well as the short term being more neutral. Obviously, today the intraday bias was up. This time frame's down, then the big one is up. This really doesn't represent a time frame so much as a pattern. Um, this pattern is just a megaphone, another ugly pattern. So yeah, I guess I'll leave with a slight hopeful possibility. Not that I'm basing anything on anything too uh, focused or too literally or too. This is the holy grail. I don't think there is one, and you got to be aware of anything being possible. There is this. There is something that should, at least this chart predicts based on a time cycle, that we should have some type of major turning point here. Whether that's an up or down one, I don't know. I don't know. What I do like on the weekly is that there is not an inverse zero line reject, but sort of it's not really a zero line reject, and it's not really a hook from extremes, but at least it's in the green here, and it's some potential bottom building. It's not obviously this. The opposite would have been this one, which is a hook from extremes here, right? Classic hook from extremes, very close to the 200, and then, but you didn't even have to. The beauty principle, right? You didn't have to touch it this time. It was enough, and then bam. So I like that we're pausing there. I'm hopeful it'll be a more bullish than bearish. That's what if someone had a gun to my head, I would bet that just historically, but I don't like necessarily how this looks so much. This was really clean, right? This double bottom, which was in Monday, March 31st, was not only a price pattern double bottom, but the location was at this balanced breakout part, and we had just broken out and then rested. That was a classic move. Now a little higher. It's a little more ambiguous, but I still think it'll hold. But we'll have to, you know, see how this plays out for the rest of the week. But yeah, you guys know where to find us. I'm glad that Kobe came back this week. There's a lot of great material on the channel for people to go back and assimilate over the weekend if they want as well. But yeah, in this environment, I would say don't make any rash decisions with larger time frame portfolio bets, but maybe focus on a day or trading strategy, right, based on the daily call more so, and don't even try to stack necessarily into a position because the market's very uncertain right now, and is the volatility of the two-sidedness represents the psychology of the market participants trying to figure this out. We're not the only ones that are uncertain, and uncertainty is certainly a position. So thanks for coming out, guys, and I'll see you guys on the next one. Take care.
Thank you.
Thanks, Tim. Good luck, brother. See you tomorrow.